Let me welcome my brother, Big Young. See him in the house. Welcome, 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 welcome. How you doing?
Thank you, Tony. Thank you so much.
Yes.
And you hear me?
Yes, we hear you now. We hear you.
Perfect,
Yep,
perfect. Hey,
good.
amazing. Thank you so much for the compliment. And it's very feeling the. I've heard the stories from our, members,
Yes,
and by
yes.
listening to them, it reminds me when I first started, and when you and I first met back in 2012.
Yeah.
And you can do it. You can do it. Get your book from the
I got
ceiling.
to tell you there. Hey, you
It's
got the number one bestseller over there.
me, even when I travel. I was in Miami this past week and remember, and then I pull it out. I was, hey, I got it right here.
Wow.
So
Thank
take it
you,
with
brother.
me. So guys, don't like you always said, don't don't give up before you make it to the top. We always are looking for the top, regardless if you made it to you set your goals. And I've noticed from the years working side by side with you, you notice that you have to listen to your business. And in my business, every 5 to 6 years, it changes. It goes to a different direction, but in the same industry. You know,
Yeah, yeah.
I started as a contractor. I have my landscaping business. I have a construction business. I was a real estate agent. I put myself inactive because I started doing more investing, flipping, Section 8 housing. And like I always say, real estate is like a big tree. It has different branches. You just have to figure out a way which one you feel comfortable. Okay. Um, I do the same training in Spanish, so I do have a lot of. I coach a lot of guys that are into the game, and it's what my duty as a coach is to save you that time. What I've learned since 2004, I'm gonna make you learn it quickly. I mean that learning curve that I have for more than 20 years. I mean, I'm gonna make you down to 3 or 2. It's like a fast lane. We'll be here for you, okay? And I want to tell people the real deal, the pros and the cons. I don't like when I see all these seminars, all these courses that you see out there. Like, I'm gonna save you money, guys. I'm gonna save you that $30,000, $40,000 trip that you're gonna do in Vegas to know how to do real estate. We're doing it right here with our main master coach, Antonio Smith, and the rest of the coaches and the team. We're here to make that again, make that save you that money and reduce the time from what you're going to learn. Because when I learned, obviously back then there was not social media, there was no actual coaches. You know, you had to learn on the hard way, learn by mistakes. Um, that I've made money, yes. Have lost money, absolutely, absolutely. I was telling someone today, um, someone today that they're using this client. They use like 3 hard, they were using some of my lending source, and I'm like, you know what? I salute to you because even in my prime time, I never flipped 4 properties at the same time. 4 property. I mean, doing one it's already stressful. Imagine 4. And they had the best attitude. They just closed their last deal and they lost money. I told them when we had the interview, I was like, "Are you sure you're willing to do this?" They had the team, they had now the other house that they're about to close, they are making. But my my comment was, don't don't give up. Okay, you're not losing, you're gaining experience. Now you realize what it works and what does not work. Now you realize where you made the mistakes. You know, I like when I have students when they're like side by hand, like when I tell them here, go this way, you go that route. I had, some people that are a little more stubborn, like, no, they take it more emotional. They realize now that this game of real estate, yeah, it's got to be logical. Sometimes you're losing, you're gaining, okay, because you're gaining experience. all right, and then you move on to the next one. Don't get stuck on like, well, I failed because I didn't make profit. No, you're not failed. You're learning because the only way you can become perfect is practicing. And if sometimes when you're in the practice mode, you have some failures. That's fine. That's okay. You know, that's what it is in real estate. You might be seeing Instagram, you might be seeing people like all you see is like marketing. The other day, I had a one of an investor calls me. He says, "Jan, I noticed that our realtor, I think they have to put. Let me ask you something. Do we have to put more marketing, more ads on social media like Facebook? Should we have guys? Now listen, let me break it to you, okay? As an investor as well, the house is not gonna. If you're flipping a house, right? If you're flipping a house, you're using hard money or cash, whatever. If you get your house on the market and you're like, well, Jan, do you think that the agent should invest more in all this social media like TikTok, Instagram, and all these random stuff? Like, no, no, no. I'm gonna tell you this. Social media, the marketing is not for the house, for your property. So you guys, if you're watching this and you guys are flipping and you get your real estate agent, don't be concerned why he doesn't have his house on Instagram and all that. No, the house is going to sell because there's a platform called FMLS, or if you're in Georgia, it's called the Georgia MLS as well. Okay, so I said when people are agents are using social media, it's they're promoting themselves. They're not the property is there. So he was like, you know what, Jan? I never thought about that. I thought the house could sell because I do more ads. Listen, when you're flipping a house, putting balloons and putting open house, that's not gonna really gonna expedite the sale. Okay, the house it will sell location and price. So part of this program that we're going to have with the selling air is pricing it right. Okay, price it right, and location. We're definitely going to talk about obviously private money, or I like to call it alternative lending. I don't like to call it hard money. That sounds like a shark. Personally, guys, I work as a contractor for a company that I basically analyze the physical part of the property before we approve it. There's an underwriter. There's a processor. There's an underwriter. Okay, so I'm going to tell you all my experience or anybody's experience that would like to use private fund for this. But before I give the mic to Antonio, guys, don't give up. Okay, don't give up. Doesn't matter the age. Your stories are my stories. I come from rock bottom as well. It's never too late. It's never too late. Like I said, guys, back in my early days when I started this in 2004, there was no online coaching. There was none of this. I mean, you had to learn by yourself, and I was blessed that I met Mr. Tony Smith in one of our properties and we started building a relationship. Now we're like family, and I have to thank him as well for, part of my career. A big portion of my career is part of, Antonio's program, mentorship. So you guys in good hand. And I told Antonio, I said, Tony, let me be part of your team because I like to share my stories.
You're in.
I like to tell people what I went through and how you can make it happen. I'm super happy right now. I coach other people how to live abroad, overseas. That's another chapter of your training, and that's what I do. I like to help people that we can change your life in all aspects as a person, financially, in your career. Maybe you are architect and now you decide to do this real estate. Maybe you are philosopher and now you're like, you know what, I want to do real estate. So like I said, it's a big tree, and we're here to help you.
100%. Well, thank you so much for sharing that, brother. So what I'm going to do, because I told him I was going to share a couple of four things about them buying. What's the benefits of them buying a property cash? Now, a lot of people out there tell you, oh, it's not a good idea to buy a property cash, whatever that situation is. 4 reasons you should buy a property cash. Like if you already have a property that's almost paid off, especially if you're close to retirement, it can be a benefit for you because now you can reap the benefits of that equity that's already in that house. We can use that now that you understand how you have one asset, you can leverage that and get 3 to 5 more just from that one and start to build equity quickly because you're using the leverage of that property. You're getting 75% of the value of that property. Now you understand how to buy other properties below 75% of the market value. You get you five based on that one property. So that one property should flip to 3 to 5 properties, okay, that you're basically getting a monthly cash flow with. One of the other reasons you want to buy cash and do cash is immediate cash flow. I've seen so many people that they go out there and do a burst strategy. That's when you buy it, rent it, refinance, repeat that process. But they only cash flowing like $100 or $50, $20. Now, why would you go through all that effort, refinancing and all that stuff if you only cash flowing like $20, $50? It's not worth it then, right? You want to make some real money. You want to be at least 75% as profit and put in your pocket because things happen when you have a property. Things break when you have tenants. And things happen. So you want to have some reserves available if necessary. If you need to make immediate repair or something happen where you have to find a new tenant or something like that, have a little bit of reserves available. And if you buy own that property cash, it gives you a little bit more leverage. So you're not as concerned and have to pay the mortgage every month because you own the property on cash and you have no mortgage. And another reason you can buy that property, you become your own bank. By becoming your own bank, you basically can sell that property on different terms. If they don't pay those terms, you can foreclose and get that property back and start over again with someone else. That's the power of owning that property cash or buying it cash because you got that immediate equity, immediate cash flow, and you're not as concerned as other people that has to have the financing. Now, there's some advantages. A lot of people talk about hard money loans, right? Hard money loans is like someone giving you money at a higher interest rate. It's going to be a high interest rate, but they're doing it based on the quality on the property, not necessarily your credit. Now, some do, but many nowadays would do it based on the property. So now that you've gotten good at wholesaling or you got a property, you understand how to evaluate properties, you can go to a hard money lender and say, hey, I found a great deal here. This is a great deal. They look at it, evaluate it, and they agree, yes, it's a great deal. We'll give you 20, if you put down 20 to 30% down on that property, we will pay 60 to 70%. Now, some of our members are doing that and they're banking a quick, 50,000 or so per deal because they understand. But I wouldn't say you do that on your first deal. You want to basically learn how to evaluate properties first because that's going to be the asset that you need. Now, if you know that we can get that property below 65% of the market value, now you can take it to a hard money and use their money to make you money. That's called other people's money. So if we can use their money, we can leverage. We don't care what the interest rate is because we know we're going to get this job done within 3 months by the time that big note start hitting us. Within 3 to 6 months, we want to be in and out with a hard money deal. So that's the power of understanding how to evaluate properties. Even a lot of agents, they don't know how to evaluate properties and they don't know evaluating that. So that's what we teach you guys here, how to evaluate that property properly. Like some of you guys are wholesaling deals. Now, that's why the cash buyers don't pick up. You're sending them bad deals all the time. And they looking at the deal like, wow, I'm not going to make no money with this deal. Why are you sending it to me? You should list this property. Give it to an agent. They're the ones that list these properties overpriced, not us. We buying them at a retail price that's going to make us money. That's you got to understand the difference. Now, agents are great. You got to work with agents out here. I love working with agents, but their job is to sell it at the highest price. Your job as an investor is get it at the best price with the best value that you bring as an investor. It's a difference in thinking. But if you're an agent and you understand how an investor think, you're going to make more money and win more deals because they're going to come to you because you got the best of both worlds. You can finance and use banks. Investors don't necessarily use banks. They use hard money loans or they use their own cash or they use creative equity to buy the properties. So that's the power of that. And another thing with hard money loans, you got to understand that there are terms and you may not get all the money up front. They may give it to you in different batches. Like, are you done with the kitchen? Go back. They're going to come out and inspect it and do it. Then you get the next batch for the next amount. Because I've seen people do hard money loans and they did it wrong and they burnt out quick. That was their first one. They got excited. And then the hard money people came and took the house back and they sold it to me for a discount. So understand what you're getting into when you're doing, if you thinking about buying something cash versus buying hard money. And another reason you buy something cash, if you don't need the money right now, in the next immediately. Like I remember buying some things cash and I needed that money like in 6 months. I found a great deal. I was like, well, wait a minute now. I found a great deal. Now I'm spending all this money on this deal over here. No, money's tied up.
Yeah. Let me jump in there, guys. Perfect. Everything that you're saying, Tony, is totally true. When you guys hear the term OPM, it's other people's money. Okay. For those that are there on the group, if you do have the cash, I highly recommend use your cash first on your first deal if you can, so you know the timing, because you need to understand like the maestro of orchestra when you're doing a rehab, because time is money, guys. Okay, like I said earlier, I have some students that we have lent them money, totally success, and we have some other ones that I have lost money. Luckily, we have not taken anybody's people's house, okay, for the company that I work for. But there's strategies to bail out, refinancing, lower the price, especially now that the interest went up, the regular retail interest. Okay, but analyzing the deal. So what we're going to do in the future, if anybody's using the Harmony Lending Program, we're going to analyze the deal together, like Mr. Tonio said. We have to analyze it together. We might see something that you don't see based on our experience. Like, for example, you might find a great deal, but the wholesaler or whoever's selling it to you, you didn't know that it was in a flood zone.
Yeah, big deal.
Yeah, there you go. And then we got to tell you why the flood zone. Then the buyer's mortgage company will require another type of insurance, regular home insurance and flood insurance. How to do what you were saying earlier. There's some lenders out there that will give you money for the rehab. It's called draws, right? But that's more in the new construction level. Okay. But you're totally right, Tony. With hard money lenders, if you put 20% down, you got loan origination, you got payments. We're going to calculate everything, worst case scenario to the best case scenario. What's an ARV, after repair value? What does that mean? It's like when you're going to sell the price of the, at the retail price, minus your commission, minus your purchase price, minus your cost of operation, which is your loan origination, payments, rehabs. We have to do our due diligence on the contractor, because the contractor is the one that makes most of the profit. Be careful out there. I was a contractor, so I'm going to tell you exactly what you got to look out for. They might give you a bid to get the job, and then once they're inside, that's where they make their money. Oh, Mr. Tony, guess what? There's something behind the wall we didn't see, and then your budget. You're like, okay, how much is that? 5,000. Jesus, that's an extra $5,000 from your profit. So, guys, there's a lot of things that we're going to talk about when it comes to private funding. It's a great tool to have, but you have to kind of have your trick, how kind of like hit them on the sweet spot. Okay, learning the property. Even if you're new at this, if this is your first deal, I'm gonna be like, yo, be careful. Let's not get a stop work order. Let's do a kind of lipstick work. We don't want to tear out the whole house and then suddenly you get a stop work order, because that's a nightmare right there. So yes, if you do have cash, guys, try to use it first so you understand the concept. We'll still guide you how to proceed with everything and give you a lot of tips. If you're in Alabama, Tennessee, South Carolina, and Georgia, it's the same concept in same concept, but in different cities. Okay, but absolutely, try to use your cash if you can. If you do have a cash that's already paid, a house that's already paid off, and you want to pull money out, it's a cash out. You can, like Tony says, they'll probably give you 75 to 80%, of what's the property's worth. Obviously, it's going to be an appraisal, and then you can use that money to do that. Now, private lending are like Tony said, It's going to be based more on your down payment. They're not going to look at your credit, but they will see your bank statements. They want to see your cash flow. They want to see how, if you do have money to pay this kind of notes, And the trick about this program is you got to go in and out. However, if you're telling me that you're buying a quad, or you're telling me that we analyzing things where one of your units, one of your doors are going to pay the note and the other one is cash flow, that's fine as well. We're going to talk about for how long you want to keep this property. 2 years, 3 years, 1 year. Oh, Jan, Tony, I do have a regular traditional lending ready lined up, but it's got to be within the 6 months. I got all my transcript, I got all my taxes done. I can refi it, but I got a deal right now, and I got an emergency. I want to get it. I need this private fund because it's just basically go. You qualify, run title, it's clear. We'll go to closing the table, and then 6 months we're going to refi. But we need to make sure that you're not going to a death trap, a death row right there. So Tony, I'm glad that you mentioned this because not all the lenders will tell you that their deal is to. It looks like some of these private lenders are set up for you to failure, so they can take the house. So you're basically doing the legwork for them. Oh, they find the deal. They put in 20%, and they doing this. Nah, we don't work that way. But yes, it's a great tool to use. But again, it's all about timing. It's all about knowing your contractor, knowing your team that's going to be working with you. We're going to analyze your ARVs, your comps around the neighborhood. We're going to talk about a real estate agent that's going to help us to say, yes, it is a good deal. Wholesalers out there, if you buying a great property, make sure you leave some meat on the bone for the investor that's going to flip it. Okay. Or if you're a wholesaler and you want to flip that property yourself, we're going to help you. We're going to help you, and we're going to coach you all the way from the time that you purchased the deal from Mr. Tony Smith, all the way to the rehab, what you got to look out for, what's the trend on the rehab in those areas, okay? And know how to beat the timing on this program. Tony, do you remember our property in Rankin Street? Remember, we bought Stone Mountain,
Yes.
My first deal with you. And guys, I bought back then in 2013, all those 4 units that I bought from you, I used hard money, remember? I used hard money lending, and what happened was that once one of my properties went up on value 4 years later, I sold it, and with the proceed of these, I paid the other three properties in Decatur. So it was great because I was able to knock out all the hard money loans that I used back then, even though that I was positive cash flow. But I knew that I had to wait. The time was right. My tenant was paying for the note, and I was still cash flowing, and my Section A as well. So all it took was one deal, got a lot of equity, and I paid all the note. Guess what happened? We waited from 2016 all the way to 18, and all those property indicators, I decided to flip it to make top dollar. But again, I use it.
Wow.
I use private funding to get that.
So let's dig into that for a moment, because other people's money, you use that to come up. You found the deal, you bought it at a highly discounted rate. You waited a year or two. When the market value went up, you sold that property, made a profit, paid off 3 properties.
Mm-hmm.
Now you're debt free. And you sold to me. We did a similar situation because we knew the property value was going to go up some more. So that's like a play-by-play right there. If you
we did that. Yeah. Mm-hmm.
So it's a play-by-play. If you buy the property the right way, maybe it's going to be a property that you hold for cash flow for a year or so, or 2. You cash flow in that property. You get tax advantages because you got that mortgage payment, that whatever payment's coming in, got tax advantages for that. Then after that, 2 years, you could basically sell that property, pay off that debt, and you can make a profit on that deal as well. So
absolutely. No. And if you're good standing with your lender, not only you pay off all your other deals, right? Like I did, I immediately paid that off. But as I went and tap on again for another loan because they looked my history and said, yeah, Jan, go ahead, that's fine.
Yeah.
Go for it, and I find another deal. And that's how I was able to build my working capital. I bought all those rentals in a good locations. They were upcoming. I took advantage of the system. The property went up high, and I knew that was the time to sell it. It wasn't the time to keep it because everything was going up. Our RI back then was 17, 18%. Once it was dropping, but the appreciation of the property was so high, I said, it's time to sell it. And that's what we did. So, I really would like to help people that they want to start. And I know, guys, in your state where you're located, in your city, what we're going to talk about is go to those meetings, those municipality meetings, those hearings. When I first started, right before I met you, Tony, back in 2012, in 2010, a gentleman told me, hey, he whispered in my ear, go to Decatur. Man, Decatur back then, if you were from Atlanta, Decatur back then was like, uh-oh, watch out, man. Better get your AKs or guns ready.
Yeah.
I listened to him. Yeah. And he knew what was happening, what's going. I was a contractor, by the way. I think I mentioned it earlier. Yeah. So I was a general, not a general contractor. I was a subcontract from a GC, and I had to go with him to rehab all these properties. And he told me, it's like, I go to all these meetings. And that's how I able to pick up, well, if my boss is buying Decatur, I'm going to do as well, if he's telling me. So guess what I did? After we sold Decatur, Turner Heights, the Turner Heights property, Dennis Drive, all those properties that we bought back in 2012 or 13, guys, the same, he told me that. So what I did was I went to the city of Atlanta. And that was back then, Tyler Perry was on the word they was buying, but nobody was willing to where. Oh, he's moving the studios to East Point, right? Guess what I did? While everybody was hunting Decatur, I bought all my properties in College Park, East Point, Hateville, and part of that little Forest Park area. The same concept. It obviously was in a higher price because obviously now we're in the era of flipping. Same scenario, copy paste. I did it. Once we get out of the DeKalb County, we went down to Fort South Fulton. Same thing, and here we are. I still kept some of the rentals because obviously, guys, I live abroad, so I use that cash flow, and here it's 4 times more. But that's how I built my income. That's how I started it. I started it from scratch using Harmony Lending, as a source. Wholesalers, phenomenal wholesalers that I've done work with, and I find great deals, and that's where we are right now. I would like to help you as well, so you can do the same thing. Your goal in life might be different, but if you want to basically build your portfolio, let's do it. But you have to learn how to listen to your business when it's time to sell.
100%. Yeah, sometimes.
You got to listen to your business when the business says, all right, Mr. Clarence, or Erica, it's time to sell. We did good. We have fun this 2, 3, 4 years doing this house rental, but it's time to go. Time to move on. Let's cash out, get the money, regroup, and go somewhere else.
100%. You can't fall so much in love with a deal that you don't take action when it's that time to move. Your games will change. Your plans will change on your deals, just like you're saying, Jan. You may think you're going to rent that property out, for life, and then all of a sudden something happened in the area or the market just changed, and all of a sudden you got a major opportunity. Take advantage of that opportunity, because as long as you know how to evaluate properties, you can find another one. You can find more. You can multiply that investment. So take advantage of the opportunity. Your plans are going to always be changing. If it's going to change next year, then it is from now. Maybe in the 2 years, but they're going to change. So be ready to pivot, change, and seize the opportunity when it comes.
Absolutely. So we're here for y'all, and like I said, guys, on a one-on-one session, we'll definitely give you all what you need to know about analyzing strategies, pro, cons, answer all your questions before you pull the trigger.
Drop your comments in the drop your questions inside of the comments area. Also, let's give our guy Jan some thanks for popping in here and sharing. What you doing tomorrow, Jan, at 12? You can hop into the training tomorrow, the live stream?
Of course, I'm going to be in the roundtable call, man. Come on.
All right, man. you're in the house. You're in the house. So yeah, Young's one of the coaches over here. So he's going to be, basically teaming up with you guys as well that are already members. A lot of new members coming in. So we're going to be locking arms with you guys to win in this real estate game. So drop in the comment. Let's thank Big Yum. Erica said thank you.